Hello, I'm Michael Reinking, Senior Market Strategist at the New York Stock Exchange, and this is Market Storylines. Every week, we're here to keep you up to date on the key trends and events driving global markets. We are recording on Thursday afternoon, so let's get to it. Now, it was an eventful long holiday weekend. President Trump broke out the trade war playbook again, souring the mood in Davos ahead of the World Economic Forum. But on a lighter note, there was plenty of entertaining playoff football, which was capped off on Monday night with the Indiana Hoosiers winning their first national championship and the third straight for the Big Ten Conference. Now, markets paid homage to that victory with a deep sea of red on Tuesday as traders returned to their stations. The headline blamed for much of that weakness was President Trump's threat to enact 10% tariffs against European countries that didn't go along with his plans to acquire Greenland. Now, the Greenland headlines captured a lot of the attention, but the other factor driving the weakness was a surge in long-dated yields in Japan amidst concerns related to consumption tax cuts and increased fiscal spending ahead of snap elections in early February. And this also sent the long end of the Treasury yield curve higher, with yields hitting the highest level since the summer. Now, throughout the rest of the week, the yields have pulled back ahead of the Bank of Japan policy meeting this evening, with growing speculation of at least some verbal intervention. Now, on Tuesday, U.S. markets closed sharply lower. The S&P 500 fell over 2%, the biggest one-day decline since October, with the index breaking below its 50-day moving average and giving up all of the year-to-date gains. Now, the losses were broad-based, but mega-cap tech bore the brunt of the selling, while there was some outperformance in defensive sectors like consumer staples, healthcare, and energy with the looming geopolitical risks. Now, declines in small and mid-cap indices were a little more subdued. Now, markets closed near session lows with President Trump's Davos address scheduled before the open on Wednesday. Now, there was a tepid bounce in futures overnight, but those gains had evaporated before President Trump approached the podium. Now, the speech was rather long and included something for everyone: a victory lap of his accomplishments in his first year of office, plans for his big golden dome, a review of Europe's socioeconomic situations, mentions of Denmark's short appearance in World War II, NATO, French President Macron's sunglasses, which, for the record, were pretty cool, and even projections for election results if he ran against the pairing of George Washington and Abraham Lincoln. Now, as you can tell, it was a wide-ranging speech, but the headline that caught the market's attention was when he said he wouldn't take over Greenland with excessive force. Now, the sort of olive branch helped equities bounce back at the open. Those gains faded during the session before President Trump appeared on the airwaves again, saying a framework for a deal involving Greenland had been worked out after a meeting with NATO Secretary General Mark Rutte, and proceeded to cancel the previously threatened tariffs. Now, this quick about-face helped equities bounce back, recouping pretty much all of the losses to start the week, and small and mid-cap indices hit new all-time highs in a continuation of the rotation that Eric discussed in detail last week. And markets have continued to move higher today. Now, details of the framework are scant, and EU leadership is meeting today to discuss the events of the past week. Now, if the MAC desk were geopolitical strategic bankers, which we clearly are not, before another activist investor gets involved, we'd push Denmark to announce that they are exploring strategic alternatives, which could include a tax-free spin-off of Greenland or an outright sale. Now, that could lead to a bidding war that accrues significant value to stakeholders and unlock value that is not being rewarded by the market currently. Now, we think the U.S. would be in a strong position to be a stalking horse bidder in such a process. And if nothing else, Denmark should check in with the Dodgers before signing any deal. The only thing they're missing on their roster is an Arctic territory. As legendary WWF wrestler Ted DiBiase, aka the $1 Million Man, said, everyone has a price. Now, outside of all the geopolitical headlines, which has kept us on our toes, it was otherwise a reasonably quiet week. The Supreme Court had another opinion day without a ruling on IEEPA tariffs, and the court is set to go on a 4-week recess, which suggests a decision won't be made until at least late February. Now, the court also heard oral arguments in Lisa Cook's case, with Fed Chair Powell in attendance, and seemed to express skepticism that the president had the authority to fire her. Now, markets continue to wait on President Trump's nominee for the next Fed chair, with Secretary Bessent suggesting that could come next week. There have been big swings on poly markets over the last week, with Kevin Warsh moving into a commanding lead after Mr. Trump signaled that the other Kevin would likely stay in his current role. However, BlackRock's Rick Rieder's odds are quickly moving higher after President Trump said he was very impressive in a recent meeting. Now, earnings season officially got underway. If you missed it, check out our Q4 earnings preview on the NYSE website. Now, last week, financials led us out of the gate, and there have been a smattering of announcements throughout this week. It is still early in the process, thus far, the market response has been mixed. A couple of companies have gotten hit after highlighting some margin pressure. Now, next week, the pace of earnings will start to pick up, with AI moving into focus with both hyperscalers and suppliers starting to report. Now, for the week, the S&P 500 and Dow Jones Industrial Average are around unchanged, both trading just under the big round numbers traders are ready to celebrate. Small and mid-cap indices are up closer to 2%, with the Russell 2000 already up 10% year-to-date. Now, precious metals have remained strong this week, while the energy complex has been very volatile. Oil is selling off today as markets await a readout from the special envoy meeting in Russia, and as there's been an Arctic blast moving across the U.S., natural gas prices have surged over 50% this week, with the February contract trading over $5. Now, the crypto complex has remained under pressure after the Genius Act fell apart in Washington last Thursday, but we've had some exciting developments on the crypto front at the New York Stock Exchange this week. Today, we welcome BitGo Holdings, a leading digital asset custody and security firm, to our community of listed companies following a successful IPO. And our parent company, Intercontinental Exchange, announced that it was working closely with regulators to launch a tokenized security trading platform. Now, as we look ahead to next week, earnings, the FOMC rate decision, and potential chairman announcements will be the primary catalysts, and I'm sure there will be plenty more to discuss on the geopolitical landscape. That's going to do it for this week. Thanks for spending some time with us. If you like today's episode, please tell a friend or leave a comment wherever you listen to your podcasts. I'm Michael Reinking, and we'll talk to you again next week.